Welcome to the Friday Five with Steve Greenfield on CBT News.
Welcome to this week's Friday Five, where we recap the last week's action in automotive technology deals. I'm Steve Greenfield from Automotive Ventures. Thanks for joining us. So let's dive right in. Stock markets remain buoyant and many companies are taking that opportunity to push through their IPOs. With the uncertainty of the election, the backlog of unemployment that will have to play its way through the economy, and the continuing global health pandemic, there's just immense anxiety about what 2021 is going to bring. The IPO window may close any time, so there's a mad rush to get out in the market. Many of these companies probably should have been public months ago and are now trying to get out while there's still some stability in the market. We're absolutely going to see a flurry of IPOs between now and the end of the year. It's great to see physical automotive dealership deals happening. This week, a partnership between the Elway Dealership Group and Schomp Automotive Group purchased Porsche Salt Lake City from Strong Automotive Group. The Strong family established Porsche Salt Lake City in 1958, establishing one of the first Porsche dealerships in the United States. Legendary Hall of Fame football player John Elway and business partner Mitch Pierce founded the Elway Dealership Group in 2004. The group has holdings in Colorado and California. Schomp Automotive Group is a fourth-generation, family-owned business with dealerships in Colorado and Utah. The company's dealer principal and CEO, Aaron Wallace, who is a great-great-grandson of the founder, is also founder of Denver-based software company A to Z Sync. Online used car retailer Vroom is offering 9 million shares of its common stock pursuant to a registration filed with the Securities and Exchange Commission. Vroom expects to grant the underwriters a 30-day option to purchase up to an additional 1.35 million shares of its common stock. Since Vroom's IPO on June 9th of this year, the stock has performed strongly, largely buoyed by investors' interest in online car shopping accelerating under COVID-19. In other but related news, competitor Shift Technologies added 3 new members to its board of directors this week as it prepares to be a public company via a special purpose acquisition corporation or SPAC. We should see a public Shift any day now. The Securities and Exchange Commission is examining Nikola Corporation to assess the merits of a short seller's allegations the electric truck maker deceived investors about its business prospects. Hindenburg Research accused Nikola of an intricate fraud that, among other allegations, overstated the capabilities of its earliest test trucks. Nikola has pushed back strongly, accusing the short seller of making misleading statements that were designed to manipulate its shares. Interestingly, last week, General Motors made a surprise announcement that they would take a $2 billion equity stake in Nikola. The deal committed GM to manufacturing the startup's debut electric pickup truck called the Badger. Get your popcorn on this one, it'll be one to watch. ChargePoint, one of the world's oldest and largest electric vehicle charging networks, is nearing a deal to go public through a reverse merger with another SPAC, Switchback Energy Acquisition Corporation. The deal for ChargePoint could value the company at more than $2 billion and be announced as early as next week. ChargePoint, founded in 2007, last month closed on a $127 million funding round, which valued the company at $1.37 billion. Attracted investors including German automakers Daimler and BMW, and the venture arm of oil company Chevron Corporation. Switchback Energy is a SPAC which raised $300 million in an initial public offering in July 2019. As we've discussed previously on the show, a SPAC is a shell company that uses IPO proceeds, together with debt, to acquire another company, typically within 2 years. Investors are not notified in advance what the SPAC will buy. We'll be particularly interested in how these electric vehicle SPACs play out over the remainder of the year and how the public markets embrace these players. To recap, Fisker has announced a merger with Spartan Energy Acquisition Corporation in a deal that values that company at $2.9 billion. Fisker says the deal will enable it to bring its Ocean SUV to market by the end of 2022. Lordstown Motors says it will merge with Diamond Peak Holdings Corporation at a valuation of $1.6 billion. The deal is expected to close in the fourth quarter. And electric vehicle manufacturer Canoo will go public via a merger with Hennessy Capital Acquisition Corp. 4. The company expects to deliver its first model to consumers in 2022. So that's your weekly Friday 5, a quick wrap up of the big deals in the automotive technology space over the last week. It's an exciting time for automotive technology companies, and we should see a lot of M&A activity over the remainder of the year. Please feel free to contact me anytime. See my email up here on the screen, and I look forward to discussing the industry with you. Thanks for tuning in to the Friday 5, right here on CBT News, and we'll see you next week.
Thanks for joining us for another edition of the Friday 5 with your host, Steve Greenfield.